Hello, good afternoon, everyone. Myself, Saurabh Goyal, a fellow chartered accountant and DISA qualified. I will be the moderator for this webinar. I welcome you all in the webinar being organized by Committee on Commercial Laws, Economic Advisory, and NPO Cooperatives of ICAI. It's my pleasure to be a moderator in this webinar. Our topic will be FEMA compliances under Overseas Direct Investment ODI. So today is 3rd July and the session will be from 5 p.m. to 7 p.m. Before to start this webinar, I would like to introduce our committee. So the committee is focused to encourage chartered accountant to shape strategy and policies that unlock economical, financial, and social value while combining analytical foresight with commercial acumen. One of the core areas of this committee is to serve the multifunctional task of analysis, knowledge dissemination, inputs to regulator on policy formation, to develop and publish technical guidance, background material, and also one of the most important tasks of our committee is to create awareness between our CA professional to check the opportunities in these areas like commercial laws, economic advisory, and NPO cooperatives. So, today I am happy to announce that CM Noor Pawar sir is here, who will guide us about FEMA compliances under ODI. So, CA Manoj Pawar ji is a fellow ICA member and having multiple degrees and certificates like BCom honors, PGDBA, LLB, and DISA. He is having a more than 24 years of experience in handling FEMA issues. And in this journey, he advised many blue chips companies like I can't say the name, but yes, there are many blue chips company, and he was also a co-convener in the study group on Foreign Currency Regulation Act of ICI. He started a college. He started a college named Velvet College and serving as chairman of that college. He also wrote a book named a Professional Guide to FEMA Practice and Procedure in Q&A format, which is published by LexisNexis. Today, he will guide us about FEMA compliances under ODI. Over to you, sir. Thank you.
Thank you, Saurabh. Thank you. And thanks to the committee, especially Pamoji and Harish Chatterjee, for providing me this opportunity to share my little knowledge and experience in my fellow colleagues and my fellow members. Thanks to Mayank and to the secretary of the committee to arranging this webinar. Thank you, everybody. So I'll see ODI is increasing. Let me just share the screen, then we come on to this. ODI is visible, na? Right. ODI is over direct investment. Till I think 10-15 years back, we used to always ask for FDI, because India was needing a lot of money to be a growing economy, which I started from 91. At that time, were Finance Minister Dr. Manmohan Singh, who has opened up Indian economy so that FDI can start coming into India. But our right now, our Prime Minister Modi ji is a bit different. He said, "Now FDI is enough. Let's do ODI. Now let's go out and start investing overseas." So they have made so many rules, and this now, think if I remember correctly, somewhere around 40 to 50 billion dollars ODI is going out of our country, which is an amazing figure. FDI is around 70 to 80 billion, so 40 to 50 billion is ODI. Amazing. We need to understand between ODI and OPI. Sometimes people get confused between these two. If you invest in any company more than 10%, or if you're not investing in 10%, you are taking some controlling stake. Let's say you have a say in that company. That is an ODI. But if you are investing only in listed company like you are going and buying some listed company shares, or you are putting money and to get some do some investments, that is OPI. OPI is different. ODI is different. ODI, you are, because you're not creating a portfolio, you're creating a company, you're creating a business, you're creating a line of business, or you are extending your existing business to overseas business. So that amounts to an ODI. And Secretary, I'd like to say one thing. If any questions comes in between from anybody, I love to have that, because I always prefer a two-way approach. Because especially in webinar, because you don't see any audience, you have to just speak to yourself only. But I prefer that is some questions also come, so I love to give answer to those questions. ODI things has been all redrafted, and you can say a has been rearranged, reformed by RBI in 2022. Actually, in August 2022. Prior to that, there was not a much legal requirement, or there was no much compliances. Have seen people have done overseas investment in 2001, and therefore they never filed any APRs or FLAs or whatever. They haven't done any compliance. And there was no late payment charges also. So people, you should take very lenient approach. Oh, the money is going to let's. But after these regulations, overseas national rules and regulations, 2022, RBI has introduced late submission fees also. That if you are submitting APR late, you have to pay the late submission fee. And they have given time for 3 years, which is expiring on 22nd August of 2025. If you have any compliances pending prior to this 2022 thing, get those completed by 22nd August 2025. After that, you won't be able to do it even by paying late submission fee. The only remedy left with you is going into the compounding, which is a cumbersome procedure. And how much compounding fee or penalty will be levied on you, I cannot say. Or whether that will be compounded or not by RBI actually or not, that also I cannot say. Or maybe you will levy very heavy penalty, I cannot say. So if you have any client who has ever done ODI, please check whatever compliances we are going to discuss today, whether those have been completed or not. If not, get it compliant by 22nd of August. So you have 1.5 months remaining. These why there was a need of new regulations, rules and regulations. When the existing regulations are there, because now India is a global player in global economics. We are now fourth largest economy in the world, and very soon will become third after US US and China, India will become third. As Modi ji has dreamed about 5 trillion economy, we are already 4 trillion. So 5 trillion will become very soon. So if you are in the global market, you have to adopt a global best global practices as well. What are the other people are following? So, and or sometimes you bring up some thing which other may follow you. Like we all know, TCS on remittances. India was the first country to brought that. Now, to my knowledge, Mexico has now copied it last year. They now brought 3.5% tax on remittances. And recently, day before yesterday, when US has passed one big beautiful bill, they also adopted TCS on remittance. So there we are pioneer. But in this ODI compliance is because FATCA requirements and so many requirements, RBI thought there's so much things are getting changed. So let's revamp all the rules and regulations. And that brought in more clarity and uh, more compliance as well. And after this startup thing start coming up, financial instruments also has changed a lot. Prior story, none of us have ever heard of safe instrument, iSafe, safe, or many other differential. Prior to coming out 113, there was no concept of differential voting power in equity. So things are getting changed. Things are getting liberalized because of the rapidly changing global economy. Who can make ODI? Company, of course. But my question here, which I asked the audience, can a new company, newly formed company, can do ODI? I request audience to share this question in the chat box. Can a newly formed company do ODI? Or Saurabh ji, can any of you answer this question? Sorry, I'm asking you. Okay. So you
So I
want
think
me to speak for 2 hours without hearing any voice? No problem. so, let's note down this question. Uh, we'll answer it later on. ODI has to be, of course, for beginners, for nothing else. You can't do that. You can that your limit under Allah is getting over. So you have to buy property in Dubai, and you may made an ODI to buy that property. No, you can't buy real estate through ODI unless until real estate is your business. If DLF or any other builder do that, maybe an issue. But if a person you're in trading company, go and form a company in Dubai and to buy property, no, it is not allowed. ODI is not permitted. Real estate, gambling, lottery, betting, casino, crypto, not allowed. Because a lot of people come to me and ask me that, sir, we want to buy cryptos overseas and we want to sell in India because there is arbitrage opportunity. The price overseas crypto is lesser and India it is higher. We'll make money. No, it is not allowed. That is why there is gap of price because it is not allowed. ODI is not, you cannot do ODI in enemy country. So mentioned like if I want to do an ODI in Pakistan, it is not an automatic route. I have to go through a hell lot of requirement and explanations why I want to do in Pakistan. Because Pakistan is an enemy country. To Bangladesh, it's okay. China, it's okay. But to an enemy country, we have to we go through a lot of building. And there are some sector specific conditions, like if you're a financial service company, for example, you're an NBFC or an insurance company, you should have some track record. And your regulator should have allowed you to make an audit. It's not like that SEBI has put some restrictions on you that you can't match overseas and you do that. No, sector specific. Again, my question, like in automatic route, you know, that it is automatic, we don't need to go to RBI for the approval, we have to just do the compliances and all that. If we have to go to approval route, like I started giving the example of Pakistan. I'm doing ODI in Pakistan, and some like textile is very good in Pakistan. Some textile company I'm doing ODI. Or making some cotton company because cotton of Pakistan is very good. Some cotton processing unit I'm thinking about there. Or maybe anything else. Whatever. And is it can I can go directly to RBI for approval? What is the application form? What steps I need to follow? What all I have to do to get this prior approval? Again, this is again a question I'm throwing to audience. Let them come back with their answers, which of course, as per secretary, will come in the end. So I will also answer at that time, along with your answers. If I am making ODI, just assuming I'm doing an while forming a subsidiary company in Switzerland. The first thing is the board has to decide that yes, let's form a company in Switzerland, and this director A will be authorized, excuse me, will be authorized for doing documentation, and what will be that company will be doing, what name and brand name we're going to give, what all technology, whether we are exporting that technology or that company developing that new technology or buying a technology from country which we are forming, how much capital we are going to put in, and how the further capital requirement, grant requirement, funding requirement will be completed, and how much business we are expecting. The whole project report in detail need to be discussed and consented by the board. We should be documented in the minutes of meeting. So copy of that BR will be required. So this is what we're discussing. We have to hello.
Yes, sir, you are audible.
I'm not audible.
No, no, sir, you are audible, sir. Continue, sir.
So and if it is a listed company who is forming a subsidiary company overseas, that company has to go through a disclosure requirement also of SEBI and so exchange. So all those things is relevant. And we have to went through the company law requirement. So in ODI in compliances, not only FEMA, we have to see company law requirements, sector specific requirement, SEBI guidelines. So all these things will make us as a one compliance. After that, what we do, uh, we can remit the money to the consultant who is going to form the company for us. And we should have proper bill and remitted advice for that. Because that is going to make our promotion expenses. Then we approach to AD Bank. Who is AD Bank? AD Bank is authorized dealer in who is authorized by RBI to deal in foreign exchange. That bank is AD Bank. Like I give you example, HDFC Bank, ICICI Bank These are all government national banks are already bank. Besides all big, but whether it's small finance bank, Utkarsh Bank or AU Bank or any other ABC XYZ small finance bank, whether they are AD or not, if we had doubt, we have to check with the bank because small finance banks are normally not AD because they are small in nature. This already discussed that we have to make a minutes of meeting. Now to the valuation. Why this valuation is required? If we are making company for the first time and transferring money at the face value of shares, in that case, we don't need any valuation. But if I'm going to acquire existing company, like day before yesterday, I read a news in Economic Times that Makai Bari Tea Estate of Darjeeling has acquired London Tea Brewing Company for some million of pounds. I don't remember the figure exactly. So that acquisition by an Indian company of London company is an ODI because he has just bought it. But at what valuation he is they're buying? That is important. So that valuation is required to be done. Or it may be a case otherwise as well that you are selling your existing company to somebody else, whether in India to any party selling company to any party or to somebody else. In that case also, since it is an existing company, valuation will be required. Making additional investment in our existing JV or the wholly owned subsidiary, valuation will be required. Who can do the valuation? A chartered accountant in India can do the valuation. If that chartered accountant has that knowledge and skill, yeah, let's say the chartered accountant who has done IBBI registered course, yes, of course, he can do the valuation because that he's a registered valuer in IBBI or a CPA of that country in which you are doing the investment or you are doing acquiring the stake or you are just doing this investment or you are just putting additional amount. that CPA can do evaluation. And third person is category one merchant banker. Merchant banker evaluation is must in case of listing companies. That is mandatory. So now, what is the method and which evaluations? There is no method defined in the RBI master directions. RBI say internationally accepted method. It can be book value method. It can be discounted free cash value method. It can be weighted average method, or it can be otherwise. So you can choose any method which is internationally accepted. So that revolution method is acceptable to the RBI. Of course, with valuation, the valuation has to be supported by valuation certificate and valuation report. Both. This national valuation. It happens that you have formed a company overseas and then you are selling it. Either you are not able to run it, that's why you are selling it, or you are selling for some other reason. You know it better. Or you are closing it down. So for everything, you have to do the valuation. Like this is an example, which you all knew. There's an example of Chorus, Chorus Steel. Tata Steel has bought Chorus Steel Company of Great Britain. That Chorus Steel acquired by Tata. There was the same year Tata has acquired Jewelry also. So after that announcement, Tata is like this. Wow. Tata has acquired Chorus. Tata has acquired. They became largest steel manufacturing company, but they are not able to run Chorus properly. After a few years, there are so many losses and so many debt that Tata has sold Chorus Company, Tata Chorus Company, for just £1. So whole money is being national reserve is being written off. So for that, you need approval of RBI first. Otherwise, you can't do it. Documents which are mandatory. That valuation report should be signed and dated. Working documents, whatever you have got. What is the role of AD? See, You cannot directly deal with the RBI. Whatever documents you are be filing to RBI, whatever reports, whatever certificates, whatever maybe you are giving to RBI, you have to route that to an AD. Now, questions: who, let's say, can I do one process to one AD, and can I another process to another AD, and or can I change my AD? That is my question, which of course will be answered at the end of this celebration. Can AD be changed? If no, so that means there is against my will because I've been compelled to continue in particular bank, one particular bank. If yes, what is the process? How to do it? That we are going to discuss later on. Now we have understood till now that what is ODI, what needs to be done. Now, how to do it? This is Form FC, which we have to file with our bank, who is AD also. Because small cooperative banks, or government banks, they are not AD. So bank has to be an AD. We have to file FC form, giving the details that what all how much financial commitment we are going to make, what is going to be a first remittance, and how much shares will be buying, or how much stake we are just putting up in that company. This all will come in Form FC and ODA Part 1. Along with that, board resolution, KYC report of foreign company, valuation certificate, proof of incorporation. Why I said earlier that we need to transfer money to our consultant overseas, and we have to keep the record of that, because only after that I will be able to prove that this company has been formed by me only. And along with that ODA form, we have to file certification and declaration. We have to give to AD Bank that this is, and if needed, I can share the copy of that declaration which normally AD Bank asks, and which contains that we have followed all the rules and regulations. Nothing is nothing more is required. So this is how one kind of an indemnity bond with the certification normally AD Bank takes. I say I went to a bank, given all the documents. So what bank is going to do? Bank, of course, will check all the papers. They'll check whether I'm allowed to do or not. I'm allowed to do or not. I'm eligible or not, and what amount I am sending financial commitment. It is crossing my limit or not. So bank is required to do all this. The most important thing in ODI declaration, that share certificates are to be submitted to AD within 6 months of the remittance. It's a most important. But it may happen if I am putting your money in an LC. LC is equal to LP in India, which is a partnership firm. Of course, there won't be share certificate. Then what to do? Let's keep this question alive and discuss in detail. ODI part 2. This is normally when you are doing the destination. This is, you have to give a detail of view of total exposure, financial exposure by income to program. What is the limit of overseas investment? See, we all know there are assets. One is individual, one is HUF, trust, partnership firm, LLP, company. Company also unlisted listed company. So all these people are their assets are there, income tax or whatever law is there. FEMA also. So in case of company, partnership firm which is registered, unregistered partnership firm cannot make any ODI. Only a registered partnership firm, LLP and company. Whereas in case of individual, 100% of net worth can be invested. What about achieve? Let's go. Or what about unregistered partnership firm? Let's leave these two questions open for discussion. ODI part C. And one more question came to my mind. Every day we are talking about financial commitment, financial commitment. I found one company in Switzerland with $100,000 capital. There is no concern. This is all capital. But then I saw that this company doesn't need 100,000. This company need 500,000, maybe temporary or maybe guarantee, whatever it will be. And they ask the holding company to transfer the fund. Or initial investment I made in a hotel which is under construction or which you have to construct. Of course, I won't send all the money the very first tranche. I just keep on sending the money to the same AD. So how the all remittances will go in one, because these questions I will give here, because after first ODI form, RBI send you will send you at UIN number, UIN, unique identification number. So all future transactions, APRs, everything will be having UIN number. So all the forms or returns we have to submit to AD Bank, who in turn submits it to RBI through the portal, which is open only for AD Bank. You cannot submit these papers to RBI directly because there is no direct portal. So this we already discussed multiple analysis in the one ODI. And this they want to track India's foreign asset portfolio. Now we come into APR. As the name says, annual performance report for the financial year ending on 31st March. Or it may be that our financial year of a subsidiary company ends on some other time, like in US, they follow calendar year. So many countries follow calendar year, but some countries give you choice of following your own financial year. That will be buddy, 31st December, let's say for the financial year 24-25, if I have to file the APR, I have to file it before 31st December. What does APR includes? Of course, performance cannot be counted without the financials of the subsidiary company, like who are the shareholders, how they are performing, what is the turnover, how much is the profit, how much is reserves. Or there is any change in capital from last year, previous year. In APR, there are two figures, previous year and current year. or have been declared, dividend or is declared, or have taken out any money. So all these are there in that APF form. Filing is mandatory. You need to get it certified from statutory auditor. If you don't have statutory auditor, let's say an individual who's not into very big business, won't be in national, we already discussed that what are the repercussions of non-filing of this APR. You cannot make further investment. You may require compounding, or it may be possible that RBI refer your case to ED against the FEMA violation. So that may also be a case. If you have to say, keep yourself safe from ED, please do the compliance. Besides APR, there is one more form, that is FLA, Foreign Liabilities and Assets Form, which you have to submit online by 15th of July. If your accounts are not audited, unaudited, then you can do later on also. But by 15th of July, you have to file at least provisional financials, which you can revise after the audit. Another performance report must be filed by 30 by December. Even if you don't have any operations, no profits, till that time you don't get your FC done, closer, foreclosure done of that company. And in UAE also, it is not closed till then, you are liable. Sure. Again, my question. I made some investment, but after that, like in India, a lot of companies got strike off for because of non-filing. Because similarly, because of non-filing in that country, that company law stick me off. I didn't close the company, but they closed themselves. Whether still I have to I'm required to do the compliance of APR. Yes, you have to get this closed in RBI records, not in any other country. So in RBI, your ODI file should get closed. Any write-off, as we all know, even writing off of export debtors, who need RBI approval, because that is going to affect our foreign exchange reserves. So similarly, if you made any ODI and later on you to write it off, you have to check RBI approval mandatorily. Of course, through AD bank only, but you have to take the approval. If there is any change in sharing pattern or management control or business activity, you have to report. Bookkeeping or record keeping of your overseas company is mandatory. There may be a case wherein that host country, let's say some tax haven, BVI, Cayman Island, or Dubai, so it is now requiring audit. But these countries, they don't need any document because they are tax havens. In tax havens, you don't require any audit or any financials, nothing. But still, as per Indian law, you are required to not only to keep record of accounts and books, but you are required to get the audit also done. So these are the restrictions. No fresh ODI is allowed if you are not compliant. So as I told you earlier also, that 22nd of August 2025 is the last date to do API compliances up to 2022. If you don't do that, you have to go into compounding petition, and compounding charges could be anything. Can I file at least compounding application directly? No. Even that also is advisable to file it through AD Bank. Because in any case, RBI prefer that you come through AD. And you have to make a full case why your offense should be compounded and why it should not be the whole penalty should be levied against you. RBI charge some fees of 5,000 rupees, which is nothing. And it may take time between 3 to 5 months because they have a 6 months time frame to pass the compounding order. After this, the whole compliance part, we'll be discussing practical case laws, which we get in our firm, and we'll share our experiences. that how we are dealing in this ODI compliance thing. Okay. This case, actually already discussed that RBI came into picture themselves. There was a lot of amount of India which has been sent overseas for ODI purposes is getting vanished. The second case of Bharti Airtel, they invested heavily in African telecom market. And they are given financial guarantees and all that. So what they did, because Bharti Airtel was a listed company in India, and the amount of money they have invested was crossing 400 time limit. So they gave the guarantees, which RBI has objected. No, no, even guarantee also is a financial commitment. Not necessarily that only money sent is a financial commitment. This is the third case of Infosys. Infosys is pretty compliant. In fact, the RBI auditors, when they visited that company, they found it proactive compliance. The fully compliant company, they were very happy and all that because they knew the law and they prefer to have proactive approach to complete the compliance. This is a classic example of one of our client. Of course, name has been changed. This client has formed a company overseas. Money was initially sent from one brother. Later on, that brother who made the ODI has gifted those shares to his real brother. Share certificate never been submitted to the AD. They were saying they knew there is no change of share certificates because there are no share certificates. And not only that, they made change in shareholders, in directors, and after 3 years, the company got closed also. So, what to do in this case? And when that guy has made ODI, money got finished, the our company is also closed. They are not going to get any incentive or any dividend. So, what is the requirement of compliance now? Why? This is a question to you, people. Note it down and come up with an answer. This is another example of our client only. Client has made one ODI. way back 15 years back, and there was two name parties are involved. But the AD Bank has reported only one Indian party was the lead Indian party to RBI. So only one Indian party name were recorded. Later on, the second Indian party, whose name was not meant in the first instance, has made more investments than the first Indian party, whose name was there. Second party became lead party, and APR has to be filed by lead party only. Now, what to do? And there's one more case also. In that case, the AD Bank, so which we made an ODI, that bank is closed. And as I told earlier, that only through that AD in whose name the UIM was generated, I can file APR. Otherwise, I cannot file. So that bank is now closed. What to do? Second question, similar. Bank is not closed, but bank is got sold or merged with another bank. What to do? Third question, bank is neither sold nor merged. The party or client or new party has closed all his relationship with that bank and shifted all his accounts limit, and as per RBI requirement, he cannot hold another account also current account if he's having limit from one bank. Now what to do? These are few questions. I have included some FAQs which normally ask that and they get confused by ODI and LRS. LRS is different, ODI is different. In LRS, there is a limit of 250,000 USD per year, whereas in ODI, you can invest the whole of your net worth. Yes, these are few FAQs. Share certificate, yes. Startups, we have included startup FAQ also, foundation. Destination proceeds must be repeated. Again, I'm throwing one question with this question. I have an account overseas, overseas account, let's say Dubai or Singapore, wherever. Disclosed, fully disclosed in my ITRs. Everybody disclosed nothing. So now I'm closing one company overseas. Can I transfer and my account, my personal account is there. So that company is closing. So whatever money is lying in that company will of course come to my personal account. So can I take money to my dad overseas account and save that Swift charges and conversion charges, currency conversion charges, because that account is reported, and as a resident, I can holding that account. Can I do that? Again, I'm throwing a question. So this is a late submission fee. Time is expiring. Very few time is left. So these are some charts. Just now, I hope. Now, can we take questions answers? Compliances are already shared, and few questions I've thrown to the audience. So let's have questions.
Give us 2 minutes, sir, for compiling all the questions. Hello. Uh, yeah, hi, sir. So, thank you so much, sir, for this wonderful session. And so let's start with the question answers. So our first question from the participant is, can an individual do investment Dubai company doing business who in return invest in US equity markets?
Again, that is a financial thing. It's not a business. So you are indirectly investing in the financial sector. whether that individual is doing the same kind of business in India, has should business.
So the next question is, can an individual do invest? Sorry, what is the quantum of small or initial investment up to which CA can be valuable?
Nothing is defined. Actually, it's a concept of materiality. Nothing is defined as such.
Thank you, sir.
No amount is mentioned anywhere.
So the next question is, where can see the ODI compliance forms in RBI side? So someone is asking for what's the source of this rules and compliances? So we
Uh,
can
you can see in RBI. If you need, I can share with you that APA form, ODI Part 2, Part 3, APR, everything is available in RBI. RBI has come up with a new website. The old website has been again revamped. And if you see open the old website also, they will ask you to go to new website. So that
uh,
website you can have anything. The regulations which I mentioned is there. ODI forms are there. If needed, it can be shared.
the next question is, what is the procedure in case of financial statement of foreign entities not required to be audited?
Financial statements of it is meant before 2022. It was not law was like that. If the host country doesn't need audit, then you in the RBI doesn't need audit. But now, whether audit is required in that host country or not, in India, along with APR, audited functions are must. You have to file. You have to get those audited. No other option.
Sir, if in the other in the another foreign country, it is not required, but as a AD bank is required by us. So should I do the audit of that foreign entity as a CA?
Yes, you can do the audit if you know, because you have to give a declaration also that I know the law, rules and accounting standards of that country. Am and because liability on you, you have to give that declaration in that or from that. Yes, I knew the law, and if you know that law, you can do that audit.
And there are some questions which you have asked to the participant, like
Yes.
yeah, there's a question: can AD be changed?
So, did anybody answer?
So I think we can get only the responses. So there are multiple responses, mixed responses. So I think it is good to answer that question. Like, yeah.
Yes, AD can be changed, but for that, the existing AD has to give the NOC.
Okay.
Without NOC from existing AD, you can't get the change. It is more difficult than changing an auditor. Like in the case of auditor, now you need NOC from previous auditor, but here existing AD will do the profiling, now give transfer the whole file and give you the NOC. So it is more cumbersome, and
In
then
case
you have to get it approved from RBI. At why you are changing the AD. The whole it is more cumbersome, but yes, you can do it.
answer, what if that bank has closed or the bank has merged between with other bank?
Uh, if that bank is closed for some or whatever reason, of course their accounts or their listing definitely would have been transferred to somebody.
Right.
I see you as what have been done. Or if you don't know that, you can always write to RBI, their financial department, and ask them, can now please guide us. Now, which bank is holding our UAN, and you can approach to that bank. And if that bank, and if your AD bank is merged within another bank, of course, then the other bank, like recent example is Citibank. has sold all of his business to Axis Bank.
Right.
So whosoever having UA in the city, that UA is automatically get transferred to Axis.
Okay.
Now the guy has to approach Axis Bank for the compliances.
Okay. Thank you. Sir, you asked one question. Can a newly formed company do ODI?
Any answers to that from the audience?
Sir, again, there's a mixed response, so I think
Yeah, a newly formed company can do ODI, but there is one requirement that along with ODI form, audited financials are must to be filed because you have to because you can do only up to 400% of your net worth. So net worth is from audited financials. You do get net worth from audited financials. So if a newly formed company wants to do ODI, first it has to get its accounts audited on that day.
okay.
Auditor has to do the audit. Uh, After that, they can do ODI.
So the newly formed company can also do the ODI.
But after getting the audit done.
Yeah, after getting the audit done under any under not in income tax, not in Companies Act,
Any
but
audit for company, audit is always under the company law. It is never under income tax.
right.
Company, Companies Act 2013.
Yeah, audit. Yes, yes.
You have to get it in and it is not necessary that audit has to be done on the at the close of financial year only. You can do for 5 days. You can do audit till the time auditor is giving out audit report. The audit who's to make balance sheet as on 3rd July 25.
Yes,
No
which
law
is right.
stops you. You can make the balance sheet as on 3rd July 2025 and get it audited from the auditor. It is not your annual financial. It is your financial.
Financial. So the financial should be audited.
Yes.
Sir, what are the compliances that needs to be done in case of gift of ownership by individual? In your example, sir, in your fourth example.
Yes. You have to file through AD Bank only to RBI along with a gift deed and get it approved. That is a must requirement because you have one person has made ODI. Now the second person is the owner. So it's a change of ownership. So, that change of ownership has to be approved by RBI.
And is there any specific form for that? And what is the timeline to inform the RBI about this gift?
Timeline is that after gift you must do within 30 days.
30 days.
30 days, but there's no specific format. You have to approach your AD Bank only. Give them the all board resolutions, changing shorting structure, give deed, and then documents justify why you are gifting. So with that, if your AD is satisfied, they can file the same to RBI.
Sir, I think there is a repeat question. If a company opens subsidiary in foreign, then ODI is mandatory on that company. If any company open any subsidiary in any country,
Yes, of course.
of course. So there's a question. An Indian company formed free zone company in Dubai, and that free zone company invest in real estate company and earn capital gain rental from that property. So it is ODI required because here Indian company is not investing in real estate directly.
That means you are doing indirect investment now. See, if law bars you or something, don't take indirect routes. Say directly or indirectly. See, if you say something like that I have started one company in Dubai, but to support that company, I need an office, I need a house. That is acceptable. But if like in the FDI real estate in India is not allowed, but any company, foreign company who comes to India, they are doing business, they can buy the office here also. Don't
Sir,
try to do the violation of law while taking indirect goods.
yes. Sir, one party is asking, can we show how we can access forms on RBI site? Can we share the screen and do the live tracking of?
Hmm. I hope my screen is shared.
Yes, yes.
This is a new website. You can see search bar here. Master direction, overseas investment. This is the master direction. The whole master direction is there.
And so we can show APR forms, ODI forms.
And this is circular which I was talking about in 2022.
Yes, yes.
You can do any search out here.
Right, right. So these are all available on RBI site, and we can write on search bar and
All notifications,
Right, sir.
FAQs, press releases, you can find here.
Thank you, sir. Thank you. And there's a question. Just a second. Sir, a participant is saying, can we suggest a book for best FEMA practices? Is there any book available in the market we can suggest?
Our issued book, take our issued book. That is good.
Right, sir.
That is reviewed by me only.
Okay.
Buy that book only.
Okay. Sir, there's a example you mentioned something like in case of foreign asset, that asset we have to put in ITR. So after that, you have asked some question. I didn't get that, but if you can put light on it.
See, if you have any foreign assets, I asked one question that the person has for overseas bank account. Now
Right.
he's closing the company and he want to take the money, of course, money lying in overseas company. He has to go to his personal bank account because he's closing that company. So can he take that money into his overseas bank account and save transaction cost, conversion cost, everything? The answer is no. I will say that any ODI money has to be repatriated back India. Then you can take it back again. But it has to be first repatriated back to India.
Thank you, sir. And I think all the questions have over.
Very
So
less
thank you.
question. I expected more questions.
Yeah, but there is no questions in the chat box apart from that. Yes, there is no more questions, sir.
Yeah, good. It's good. That means I've justified the subject.
Yes, surely, sir, surely. And so we are officially, thank you, sir. Thank you so much, sir, CA Manoj Pawaji, on behalf of our Committee on Commercial Laws, Economic Advisory and NPO Cooperative ICI. Special thanks to from our chairman, sir, C. Abhi Chachad ji, and vice chairman, C. Pramod Jain ji. Thank you all the participants for the engagement. Thank you so much, sir. And you can share your closing remarks, sir.
Yeah, so you want me to answer? Thank you, Avi Chatterjee, and thank you, Pramod Janji. Thank you, Saurav, and thank you, Secretary, to giving me this opportunity. I I try to justify the subject with the little knowledge I have. I hope I have been able to do that. Thank you for giving me this opportunity. Thanks a lot.
Thank you. So